Good morning, everyone, and welcome to the Ankerstar Wealth Morning Show. I'm your host, Allison Ankerstar, and today we'll be talking about today's favorable inflation number, the bump in Boeing stock, and the saga of Carvana stock. But before we begin, as a reminder, this is a financial education presentation and should not be considered as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. The November CPI number came in better than expected, and the markets are soaring. What does this mean for the market?
Hey, good morning, everybody. Good morning, Allison. And you might notice we have a little bit of a new look going this morning. So we're trying a couple different podcast squares, kind of what they're called, if you will, for our morning brief. So anyhow, if you have an opinion one way or the other, be happy to hear it. Whether you like it, don't like it, whatever, you're not going to hurt our feelings. But just make a comment in the comments if you would. All right, let's talk about that inflation number we have this morning. All right, if you haven't turned on the TV yet, the stock futures are up big, right up to the tune of 2 to 3% across the board. Nasdaq's up almost 4%. That you can see here on the front page of CNBC. So what happened? So the this week we talked about yesterday. We have the Fed meeting that starts this morning. We have the Fed release of the minutes Wednesday, tomorrow now at 2 p.m. Eastern time, where it's highly expected that it's going to be 50 basis points, which is now a break from the past 6 months of 75 basis point raises, right? So that's kind of where we are in the big spectrum of things. So leading into that, so what we have is we need inflation to break, we need the Fed to stop raising rates, and we need the war in Ukraine, Russia conflict to not necessarily resolve, but start trending better. Well, two of the three are kind of happening this week, and that's why you're seeing the reaction that you are in the market. And the first one starts with inflation. So again, we talked about the inflation being a 12-month, it's comparing to last November now. So it's at 7 or went up 0.1% versus the 0.3% that was expected. Again, that's all in relation to last year. So overall, what you saw is a move higher. And then what I wanted to show you is if you remember, this happened. We had a good inflation number about a month ago, and the market moved up 5% that day. Remember that day? And it kind of gets lost with the rest of the negativity that's in the air. But really, this is what JP Morgan put out yesterday. So again, this is not this morning. This is literally before the move happened, and their prediction. And they said, okay, if the print, which came out at 7.1, they predicted that the S&P is going to move up 4 to 5% today, right? That's like half of an annual, or a CD. That's a whole year of interest today. For the market averages being that 10 to 12%, it's almost half of a year's return in one day. And they also threw out there a 5% probability of the CPI going down to 6.9% or lower, which did not happen. But they said if it did happen, it'll rip equities higher to the tune of 8 to 10% today. So I thought that was a heck of a prediction out there. It's 5% last time. Obviously, we're going to see the move up. The real question, like Allison asked, is what does this mean for the markets? Well, obviously, it's a good news today. Helps us get a little further away from the bottom, so we don't revisit that. Is it the all clear signal? It is not. We will not get that tomorrow either. We'll get the 50 basis point raise, and that'll be good. I think the markets move higher on that, but certainly it's not time to just flip everything back long and flip the risk switch to the max and move forward. We're not there yet. So don't expect new highs anytime soon, but overall trending in the right direction.
Next, Boeing stock got a boost this morning from a new jetliner order. Is ticker BA buy, sell, or hold?
Yeah, well, I've always liked ticker Boeing and the Boeing ticker, because they have two ways to win. You have the airline piece of it, the jetliner piece where they're selling, these big contracts like the 100 Boeing 787 Dreamliners to United Airlines with the option to purchase 100 more, double that. That's one way to win. And the other is their whole defense department. Obviously, I grew up 20 years in the defense industry, so I'm very familiar with their products on that side, but also, I've been flying around the country for some time now. So I'm also, I see that too. And certainly with the airline industry being somewhat of a commodity, meaning that we need it and that they do get bailed out. People cry about bailouts, but I mean, we do need the airlines to get bailed out, right? We need to be able to move around the country to keep the economy flowing. So it's fairly safe, if you will. And airplanes age and need replaced and all that stuff. So it's really just a good stock to hold. If you're just going to pick a handful of stocks to hold forever, Boeing would be an easy one to hold, right? Because again, two ways to win. Where's it at right now? Let's go ahead and take a look. It's up this morning on the news. I was looking for the ticker to click on. There it is. So it's up 3%. Well, the whole market's up, so you would expect that it would actually go higher today. But just taking a year-to-date chart, where's it been? The summer doldrums was the bottom pretty much for the whole market. We revisited that in October, and it's moving back higher. If you go down and look at the actual numbers here, not profitable right now. So, but that's not going to scare me away from Boeing. It's only down 7% on the year. So overall, a lot of strength in this name. They, casually benefit from a war going on. Not, you don't want a war just to, move the stock higher, but they do kind of benefit from some of that that's going on there. So overall, I like Boeing. Is it an epic entry point? Not necessarily, but I wouldn't argue with an entry point on Boeing. It's one of those, if you want exposure to this defense industry and you want best of breed, but pick up some shares of Boeing and you'll be happy you did.
Les, the story of Carvana shows that stocks can continue to go down even if they're down big. Can you walk us through what happened?
Yeah, so here's where you can get lost in a stock, right? And this is it's just an amazing story. If you look at the 5-day chart, you're like, okay, right, it was down at $4. Now it's up at 540. It's bouncing 13%. When you look at betas, this is the highest beta I've seen. I saw this morning, 2.36. I mean, that's if you deal in betas, that's the percentage it moves from the market. So if the market moves up 1%, you would expect the Carvana stock to move up 2.36%. It's a sensitivity ratio. Not profitable, but look at this. It's down 97.86% year to date. So you want to see a house of pain? Let's take a look. Look at the 1-year chart in Carvana, and that tells a little different story than the 5-year. So here's my point, and this is why I brought this up to talk about this morning. Is it was up over $200. It touched 250 late last year, and now it's sitting down at $5. So even though the other day the headline was, and I think it was Thursday or Friday last week, the stock was down 98%, and it still went down like 40% in one day. So just because things have gotten epically cheap does not make them a buy. If there are problems with the company, and a lot of people are saying that this company is literally going to zero, a lot of there's folks that'll say, well, it's easy to bottom fish here. No, it's not. The market hath spoken, if you will. It's already down 98% from where it was in a year. But just realize that stocks can go. My point is, stocks can continue to go down 20, 30, 40, 50% over time and still not go to zero, right? That's math. That's that getting halfway to the door. If you move 50% of the distance every day, you get really close to the door. You never actually get to the door, kind of thing. So the numbers can get funny. Another point is, for you to get back to even, if you bought it at 250 a share, it's down 98%. Just realize you have to make a couple 1,000% on your money to even get back to even. So, if you're in the trading world and not the investing world, you're getting the volume here. Certainly, that's these bars right here, the volume spike. You're getting a volume to trade this thing. So if you want to hop in, it's almost a meme stock at this point in time. You can hop in and trade this thing because you're getting the volume and it's moving, right? But I would certainly not consider this for an investment. It is certainly super high risk. It may come back or it may not, but like a lot of things that are down 98% a year, there's a lot of people that think that attach a little bit too much hope to that. There's reasons it's down this much, so I would certainly want to see it move higher before I would even consider going into a name like this.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar. We'll see you back here tomorrow.